Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for December 9th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Over the last couple of weeks, we've nailed the ES pretty nicely. The first push through 2185 was nice, but we wanted to see it push into 2214, which is our target. We got to 2213 and change. I mentioned that this narrow range here, if we break to the upside, could be a quick opportunity to fade downward, but if we reach 78 to 85, that would be an area where bulls would want to defend for a shot of extending this into 2240. So we've pretty much nailed this very nicely on the way up and down and back all the way to the recent highs, which has been very, very nice. Now, one thing to keep in mind is that price continues to push higher toward our 2257 half target. 2257 half is the next major target above. That target comes from the Brexit range. So here's the Brexit key range when we had the two-day drop and the big rally. This first rally to 50% expansion, and finally it's coming into the 100%, which is 2257 half. So that's the next key level above the target. We could be looking at a short-term retracement at some point. Any pullback toward 2214s or so should be a buying opportunity for bulls to further defend and squeeze. Any failure to hold that level would re-auction back to 85 to 78. So right now we're in an uptrending market. Obviously, we still have some upside targets to reach for. But after you see a big squeeze like we have over the course of the week, we could see some quiet trading range activity build out at highs between 2215 and 2260 over the next week. All right, let's take a look at the intraday time frame. On an intraday basis right now, this is a very quiet trade right here. We obviously have a rollover to the new March contract, and now we're trading a very quiet range. This range right here is sitting well below the previous session's close, gap down a little bit, but we're going to see how this thing continues to coil up. Overall, any pullbacks have been great for buying opportunities. So should we drop even a little bit further pullback, it could still be a buying opportunity. Once you form this large range at highs, typically speaking, you want to stay above it once you get above it. So price needs to get back above 2243s. Otherwise, failure to hold it would re-auction back to 32s, at which point bulls would want to redefend. So those are a couple of key levels to watch throughout the rest of the day. All right, let's take a look here at crude oil. Here's crude in the higher time frame. If we look down into PivotBoss pivots here with the weekly pivots on there, one thing you'll see is that the first move into 52s again was rejected. We knew what to look for. We were looking for a rejection here. We were looking for a midpoint retest. We were looking for a push downward, perhaps into 50, maybe a little bit lower. But what I mentioned before was right here between 52 and 50 for the most part, or 49 and 50. We see a lot of trading range activity before we see the next move. So we're seeing a little bit of action here where I mentioned before on this push down, we could see another bounce up here for a retest. This could be the real driving move here upon a rejection. So if prices are rejected at 51.67, this could be a major selling opportunity for a return back to value at around 46.75. If prices come up here and reject 52s yet again, or reject the previous high, so a higher high failure, lower high failure, double top, something like this, we could be looking at a quick move back. So that's something to watch out for here as we trade over the next couple of days. Watch to see, especially today, see how it plays out in this area. Are we going to see rejection again? Because if so, this could be the shakeout leg that leads to the next push back to value. Now on an intraday basis here, we'll bring this up. Here, looking at the intraday basis, what you can see is it's been a trading range market so far. The previous session's high and close have been bid so far, and prices into 41.40, 51.40 to 51.50 have been defended so far. So we have a trading range market at highs, a flat VWAP, so that tells you right there to look to fade the edges of the range today until proven otherwise. Again, 51.67 is a big time level. Previous week's close is 68, R3 is 73. These are big time zones. So again, if price gets into this area and looks weak, we could be looking at a fade right back against the range. Likewise, if we drop into the day's lows, we could be looking at a fade right back up. So right now, trading range market with a shot at looking at a swing fade opportunity off the 51.67s and up to 52s. All right, let's take a look at gold futures. Here's gold. We're going to bring it up to the higher time frame. I've mentioned to be wary of gold, to kind of back off a little bit on a swing basis. I mean, unless you've gotten short and have held on, and it's been a decent ride down, a little choppy back and forth, but overall been trending downward. Decent price structure, decent trend. But right here, we're at some point we got to shake out of this. We got to get back above 1180 and start making a move for 1200, or we're going to continue a downward price discovery. I mentioned to our group yesterday that lots of bears are defending here the previous week's close, the pivot range for the week, 1180. Those are all key levels. That tells you there's a lot of buy stops above that zone. So if bulls can reject these lows, there could be an opportunity to squeeze above 1180 at some point, which could really catch fire and lift this thing toward 1221, 1222. Failure to get back above 1180, especially 1200. Again, there's a whole lot of room to run down there until we reach about 1040 to 1060. So clear air below. Right now, the markets are just kind of holding. At some point, we're going to see a nice expansion down the road. So let's see here the NQ now. Higher time frame, holding again, another clean rejection back up. We talked about this stop run day here. We talked about this high here and how it was important for bulls to defend these 2 days ahead of the move. Again, we've been right on top of some of these moves. Now we're approaching 48.80 yet again. That's been an area where bears have had a difficult time finding acceptance. Every time we get up here, it's been a harsh rejection back toward 46.90. That's what we called this last time, and we got it. We got within a couple of ticks of 46.90, 10 handles. Price bounces right back up to 48.80 and another 80 tick rally back up. So we're still in the range. Anything above 48.80, 4900 is a sell opportunity. We have been in an expanding range, so I wouldn't hold it outside the realm of possibility to get toward about 49.50. Get up into this area, trade some of this new action, and then fade back. So right now we've been in a larger trading range. It's fade the edges type of thing. You got to be careful when we're at highs, but we'll watch for signs that we could be moving back toward value. All right, let's take a look at the lower time frame to finish up. On a lower time frame basis right now, obviously we've moved over to the March contract. We had a big rally 2 days ago. I mentioned after the rally, you usually see a digestion day. So primarily you want to fade the edges. But after the digestion day is when you could see significant movement. You're either going to run the stops to the upside and really catch fire, or prices are going to reject above 48.70 and start a move back through the opposite side of the range, 48.40, and perhaps drop this thing back to 4800. So right now the primary opportunity is to look for expansion at some point. But if there's any failure to see expansion outside the top of the range here, it could be a quick fade back against the range. Likewise, if we drop into the LVN here, it could be another fade back toward the top. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.